Welcome back. You're watching Hot Money. Let's quickly pull up all the sugar stocks on the screen and see what the counters are doing in trade. From a Sri Renuka to a EID Parry. In fact, all the counters were trading in the positive as we started off the trading session. EID Parry still seeing gains of 2.5%. Dwarikesh, Balrampur Chini, Triveni, all of these have been in focus. In fact, you have one of the brokerage, which is Systematix, which has come up with a report which has clearly indicated as to what has really not worked in the second quarter of FY25 and what's in store in the second half of FY25. My colleague Varsha has actually done a breakdown of the same. Varsha, overall, if you see in terms of the sugar pack, if you could just help our viewers understand what went wrong in the second quarter, and if you have to look at the second half of the year, what is it that could work for them?
Well, Hiral, second half is actually expected to be better, but let's see what actually happened in Q2. So Q2 is technically a seasonally weak quarter for the sugar companies, but in Q2, losses actually widened for the sugar companies now because of the nil crushing that the company has seen and lower absorption of fixed costs. Also, sales volume, if you see, sales volumes were flat and ethanol volumes fell 28% year on year due to lower availability of feedstock, number one. Now, government's sudden policy change which we saw in December 2023 also impacted ethanol volumes. Now, if you see the power generation segment actually exported a lower power for all the sugar companies. Why? Because the sugar season closed early due to reduced cane crushing. Now, there was this significant drop in distillery profits on account of two reasons. One is reduced volumes and other is lower plant utilization. Now, the question is, will H2FY25 will be good for sugar companies? Well, analysts say so, because now let's find out the reasons for the same. So, sugar closing inventory is estimated to increase in sugar season of in 2025, and government could actually allow additional diversion to exports now, which is in ban right now, and rising international sugar prices will actually boost export opportunities when it comes to Indian sugar companies. The sugar fair and remunerative prices also raised to 340 per quintal versus 315 per quintal last year, and sugar prices, which are actually headlines if you say in last few quarters, is expected to stay above 39 rupees per kg, and international sugar prices, if you see, is up 18% since August 2024 on lower sugar production in Brazil, and higher international prices will actually make export profitable for India. And also, analysts are expecting 4 to 6% year-on-year increase in ethanol price, especially when it comes to B-heavy molasses and juice-based ethanol.